So, JC, I got to my desk on Monday and I see prices of WTI crude have shot up over the weekend. They're up about 10 to 15%. What's the impact on energy stocks?
Well, it's interesting. We were looking at the charts, right? And if you're looking at the oil and gas exploration and production index, right? The explorers and producers, they broke below their 2008 lows, but now are back above it. So like we were heading into the weekend already with a potential squeeze setting up, and then we get the drone attacks or what took place in the Middle East. But the point is, the setup was already there. So yeah, I think if the explorers and producers, the number's right around 23, 24. It's right around an area. The ticker symbol is XOP. If we're above the 08, 09 lows, man, it's hard not to expect a major squeeze. And we're not just seeing it there. You can also see it in the oil services. OIH in particular is the ETF that tracks it. And I mean, we can go back all the way to 2002, 2004. We're below all of those, literally making all-time lows in the sector index ETF. And now we're back above those all-time lows. So I think the squeeze is set up where if those indexes are above those key points, it's hard not to err on the long side.
So you're looking at basically a little bear trap or failed breakdown. Do we also have positive momentum divergence on a lot of these charts?
We got bullish momentum divergence on both of them, in addition to the price setting up for a squeeze. But the argument is, listen, the pushback is, crude oil more than doubled off of the lows in 2016. And during that period, energy continued to underperform. So the pushback is, if energy stocks can outperform when oil's more than doubling, when is it ever going to outperform? That's the bear, that's the why on earth are we going to get long energy stocks? But from a risk reward, man, that's for me really what stands out the most. So I think we got to err on the risk reward rather than the obvious underperformance, right? Plus the bullish momentum divergences.
So is there something that you want to see on the WTI crude oil chart that's going to make you more bullish and have more conviction on energy stocks? I know in the past few years, oil's been rallying, or oil was just fine for certain periods, but energy stocks did not participate in those periods. Is that something you kind of see changing?
Yeah, that's exactly right. I mean, like I said, we saw that underperformance. So I think, yeah, if we're going to squeeze, then yeah, I think that energy stocks are going to outperform. As far as oil specifically is concerned, it's messy. Because of the high positive correlation it's had with the S&P 500 over the last several years, if you're bullish stocks, you got to be betting on higher oil prices, especially if you think energy stocks are going to participate. I don't see oil crashing in that environment. So I think sideways to up in crude oil is probably what we should be expecting moving forward if energy stocks are doing well and the stock market overall is going up. So these are the kinds of things. It's not so much like, hey, let's buy crude oil. To the contrary, I like to play on the equities better. But we want to be thinking moving forward, what is the environment going to look like in the case that we're correct, right? In the case that we're correct, I think crude oil is probably doing well to sideways in that environment. And if we're going to be wrong, oil's going to get smoked, right? And these energy stocks are going to roll over. They're going to get back below those former lows, and there is no squeeze, and the trend continues down, right? Those are the two sorts of scenarios. I think it's pretty binary at this point. I like to, if we're above those former lows, I think we got to err on the long side.
So that's interesting. One of the themes we've seen in the space is that the large integrated oil and gas companies have kind of outperformed, while exploration and production and oil services, which you had pointed to, have kind of struggled. Are there any stocks that you're looking at in particular that look interesting for a long setup?
Well, Strazza, I know you like the Chevron chart, and I like it too.
I do.
Just a massive base, right? This thing's flat for the last 5 years or whatever it is, or 6 years, I believe it's flat. But we're not that close to all-time highs. We're still 10 plus points away from 135, but that's the level. We break out, That's a major base in a company. Let's not forget, this is like a $240 billion company, Chevron is. So this is serious market cap. So if energy stocks are going to participate, having a stock like Chevron as the poster child, I think is important. 135 on that, I think, is the big level. We got to be above that. We are. which is still a ways away, right? So I think in a more short-term period, take a look at Schlumberger. Go back to the 2008 lows. If we're above those '08 lows, we got to be long, right? I mean, I think the squeeze is absolutely on if we're above those former lows. Very similar to the oil and gas, very similar to the XOP, the explorers and producers. Same setup.
Right, and if big cap names like Schlumberger and Chevron are working, at least the large cap sector, Spider, XLE, should be moving higher because they make up a pretty large weighting in that ETF.
Yeah, 100%. And listen, if we're getting a mean reversion in energy, I think a lot of them are going to participate. I think it could be a situation similar to gold miners in early 2016 when they ripped. It was like, the Newmonts and the Barracks and those guys did fine and the indexes did great. But it was the little guys that, were 4, 5, 6 baggers, So in this case, some of the ones that have gotten beat up the worst, if this is the mean reversion that is potentially setting up, I have to believe the higher beta names that have gotten crushed are going to outperform moving forward. But I think it's a theme. And the best part is, Strazza, here's the best part. We always talk about how it's not about being right, it's about making money. We're not like, it's not like we're flipping the book long energy stocks or, we're going to go short. It's really just a situation where the risk reward currently happens to be very much skewed on the long side. And if that ultimately breaks, that's information in itself that energy is about to completely fall apart. I'm going to argue that it already fell apart and we can get a mean reversion and the risk reward's in our favor. I like that.
Right, and I think it's a pretty good thought exercise for chartists out there because while we don't particularly like to buy new lows, there are situations in certain environments that will arise, whereas something like this where we just undercut key lows from years past and there's some support there that we have to define our risk at, we could really find some nice setups even in trends that are moving down and to the right.
That's exactly right, Strazza. Couldn't have said it better myself, my friend.
All right, well, we'll keep an eye on this theme as energy stocks certainly look interesting here, and we'll check back in soon. Thanks, JC.
Later, Strazza.